Once again, good morning to everyone, or good afternoon, depending on where you are, and welcome to the first of our daily tech webinars. Today, we are privileged to have with us Mark Zelmer. Mark is in an ideal position to really give us some insight into the government's response and their ability to flex and meet the needs of Canadian business leaders. What provides Mark with this expertise is that Mark was one of the active contributors to the global regulatory reform agenda in the wake of the last financial crisis. He also sat on the board of the Basel Committee of Banking Supervision, and he has been instrumental in part of the development of several macroprudential components of the Basel III framework. So it is our privilege to have Mark with us today. And so Mark is going to do a little bit different format today. He's broken his talk into three components. The first on how the coronavirus pandemic differs from a global financial crisis, an overview of government measures announced so far, and the third and final component will be remaining gaps and where do we go from here. Mark will speak on each of these for about 10 minutes, and then we will open it up to a Q&A on that particular portion of the talk. I would ask everyone to please write your questions in the question box, and I will read them out to Mark, and then we'll move on. If we don't get your questions answered today, I am keeping all of the questions and we'll send them off to Mark, and he will be able to craft a response, and those will be posted along with the recording of this presentation. So without further ado, it is my ultimate pleasure to welcome our first speaker on our daily series, Mark Zelmer. Morning, Mark.
Good morning, Ruth Ann, and good morning or good afternoon to everybody around the country. It was very kind of Ruth Ann to extend the invitation, and delighted to have the opportunity to speak with you today. I should note at the outset that these are my, what I'm going to say are my personal observations. I need to protect the people that I currently have associations with and those that I've been associated with in the past. So you can't attribute anything I have to say to any of those folks. What you're going to hear is what I happen to think, and I have the pleasure of being retired, which gives me much more freedom to speak than I otherwise would have. So as Ruth Ann suggested, fundamentally, what I'd like to do today is to try and help you understand the bigger picture surrounding what government actions have been announced so far and how this pandemic could unfold in terms of the economics of it. I'm certainly not a healthcare professional, so I wouldn't presume to know and be able to talk intelligently about the medical aspects of it. But hopefully I can give you a better understanding of how the economics and financial aspects will play out in the coming weeks and months. So as Ruth Ann suggested, I want to do this in three segments. And the first segment I want to talk about is fundamentally to compare this pandemic with the global financial crisis from about a dozen years ago. Because I think the two crises, if you like, are fundamentally different. And as a result, they do require different approaches in government intervention. So if you think back about 12 years or so, we were all living in what we thought was an unprecedented financial crisis and an unprecedented economic environment. We saw economic shocks that had not been seen since the Great Depression of the 1930s. And that time, it was considered to be unprecedented. And unfortunately, this time around, it is going to set even bigger records. So if you think back, the global financial crisis fundamentally originated in some shortcomings in the financial system around the world. And it was the focal point of the storm in the first instance, not the real economy. And fundamentally what happened is we had the equivalent of a cardiac arrest, if you like, in the financial system. And it was that cardiac arrest that disrupted the economy and led to severe economic contraction, job losses, and the like. Fundamentally, so in this sense, fundamentally what happened is it triggered a credit crunch. And that credit crunch was led to the worst recession up to that point in time since the Great Depression. The solution at the time was pretty straightforward. And it came on multiple fronts. It was essentially to inject a great deal of money into the financial system to provide liquidity support and make that financial system as liquid as possible so that it would be in a position to continue lending. Secondly, major investments in some countries into major banks to keep those banks solvent so they wouldn't completely collapse. And thirdly, to take various measures that help to restore confidence in investors' perceptions of the strength of the balance sheets of major banks around the world. Fundamentally, that was geared around various stress tests, backed up by the willingness of governments to inject more capital and effectively nationalize banks if necessary to keep them going. All of those measures ultimately worked. It took some time, but those measures worked. They stabilized the system. The economy came back to life, and we've had about a dozen years of with fairly strong, buoyant growth that led us to have a standard of living prior to the pandemic that was, if anything, higher than it was overall for the economy compared to the start of the crisis. This time around, though, we're facing something completely different. The fundamental need to protect public health has led governments in Canada and around the world to introduce social distancing. And totally understandable from a healthcare perspective, but the social distancing and the quarantine measures that have been introduced to slow the spread of the virus are effectively placing large segments of the Canadian and the global economies into an induced coma. And that basically means that with this coma, the ability to produce goods and services and conduct financial transactions to pay for those services has been severely impaired. And it's a deliberate action that's been taken in order to try to manage the spread of the virus. Now, there's obviously a great deal of uncertainty as to how long will it take to contain the virus, how severe is it going to be, and indeed what the world will look like in terms of a post-virus environment. All of those areas of uncertainty, of course, are impeding the ability of the economy to function and the ability of people to conduct transactions. If as time progresses and as the situation worsens, we are staring at the risk that the ability of households and firms to be able to obtain credit and finance their activities on commercial terms could very easily fall by the wayside if we're not already there yet. And basically, a fundamental reason for that is because the uncertainty that we're facing about how long this is going to persist and how bad is it going to get and what will the world look like afterwards makes it impossible for anybody to do any sensible credit assessments and consider what kind of return do they need in order to take on the risks. So fundamentally, in an environment like this of heightened uncertainty on multiple fronts, it's not reasonable to expect that even if you liquefy the financial system the way that we've been doing, that it will be able to function properly in such uncertainty. Now, in thinking about and listening to that, you may be wondering, well, what are we hoping to achieve with this kind of disruption? And if you think about the public health measures that have been taken so far, it's important to understand that they're mainly geared to help us manage the spread of the virus. They're not meant to eliminate the virus. You're going to need a vaccine to succeed in doing that. And my understanding from talking to some medical people is that the development of vaccines, once you even find the right one, takes time in order to put them through the process of purifying them, making sure they don't have any really weird side effects and the like. So even if we found a virus tomorrow, a vaccine tomorrow, you're probably looking at 6 to 9 months before you could get one into a sensible, safe process to contemplate handing it out around the world. So a virus is not a a vaccine is not a short-run solution here. The other point of uncertainty is basically viruses have a habit of mutating over time. And one of the questions would be, is there any chance that maybe the virus will mutate into something more benign, the way SARS did back in 2003? Or indeed, it could mutate into something more malicious, the way the Spanish flu did when it went through its different waves. So as we think about how to manage the economic consequences of what we're going through, one of the things that's obvious is you have to start from a presumption of you're living with this virus, and there's probably not going to be any short-run remedies to make it go away in a hurry. So the objective primarily from the social distancing and quarantine measures is fundamentally to spread the process out in order to ensure that the healthcare system is capable of coping with the caseload that's going to come through. So fundamentally, the quarantine measures themselves are not going to solve the problem. They're only going to enable us to manage the problem a little bit better and make sure that everybody in the country is able to access the healthcare they need to help them cope with the crisis. The other thing to think about is some commentators have argued that authorities instead should focus on protecting the most vulnerable and relax the measures for the rest of the population. But frankly, that ignores the fact that while the risk of death may be lower for younger, healthier people, there's still what insurers would call morbidity risk, or the risk of people becoming seriously sick in the process. And so this is a risk that still exists for the healthy segment of the population and the younger segment of the population, because as they get sick with this virus, they too will be putting demands on the healthcare system, and including hospitals. And in addition, we also don't really have any idea of what the longer term consequences of getting sick from this virus are going to be. So that's why I think governments have taken the approach in the first instance of adopting widespread social distancing and quarantining measures, because fundamentally we need to conserve our healthcare resources, and the best way to do that is to slow the transmission of the disease. And that's done with full recognition that that comes with severe economic consequences, of which you folks are living day to day. And it comes with a great deal of uncertainty as to how long will it be applied, and indeed how long and to what extent will they be respected by the public itself, because this only works if you have the measures and if the public will consent to obey them. And how long that can work is obviously a very open question. So from an economic policy perspective, the primary focus at this stage has been very much one of taking steps to contain the financial damage to households and businesses so that the economy has a better chance of staying intact and being able to recover when the pandemic eventually passes, as it will indeed someday. When we get to the next section, I'll talk about some of the measures that have been announced so far. But the key thing I wanted to suggest at this point is, as we go through this crisis, what governments are fundamentally trying to do is to, in effect, keep the economy intact and make sure that as the coma is induced, that the various parts of the economy that are affected by it are still able to recover when the coma is ultimately lifted. And as we do that, we also need to bear in mind that this is not purely a Canadian issue, as we know. Yes, indeed, people around the world are being affected severely by this crisis. And we depend not only on how strong are the measures taken in Canada to be able to keep the economy on hold and intact so that it can recover down the road, but also how strong are the measures that are taken in other parts of the world. Because at the end of the day, we are a country that relies heavily on exports to purchase our goods and services that are produced here in Canada, and imports to obtain those goods and services that we cannot produce efficiently here at home. So we have a big stake in how other countries cope with this pandemic, and we need them to succeed as well if our economy is to make a full recovery. So with that as an introduction, why don't we stop there and see what kind of questions you might have to fill out this segment. Thank you.
Thank you, Mark. And as you have alluded to, this is a global issue. And many people have been talking about the word unprecedented. How would you respond to that? I mean, you have actually been instrumental in maneuvering and making decisions in other financial crises, but how would can you clarify the unprecedented component or address that? Is that a reality, or is that just a little bit of sort of people taking a liberty?
The economic damage that's been caused by the coma is well beyond what was seen during the financial crisis. We're talking degrees of government support for the economy writ large and the financial system writ large that go well beyond anything that we lived through 12 years ago. In terms of the severity of the pandemic itself, the mortality estimates and the like seem to me to be more along the lines of the Spanish flu back 100 years ago. So the severity of the pandemic in a longer historical time frame is not unusual, but the economic damage this time around, because we're far better placed to be able to manage the public health consequences, that's leading to economic damage that's well beyond anything that we've seen since the Great Depression.
Thank you. And I think that's what everybody's feeling in terms of the, as you say, the induced economic coma. The damage to the economy will have long-term effects. And one of the questions coming into this is the effects on health and well-being and taking a balanced approach. And I think you're going to address that now as we go into the next section on government measures. I would encourage everyone who's on the line to just feel free to put in some questions or some comments so that we can address any of your concerns. So with that being said, Mark, do you want to talk about what the government measures announced so far mean to us?
Sure, thank you. So with the benefit of hindsight, it would be easy to say and argue that Canadian governments have been slow to respond to the pandemic. It would also be tempting to look at the actions taken by China and some other jurisdictions with all their high-tech wizardry and wonder why we do not do the same here. But we need to bear in mind that we live in a liberal democracy, not an authoritarian regime. And as a result, government officials are very mindful that when you introduce measures like social distancing and quarantines and the like, that and to contain this pandemic, these are major intrusions on the rights and liberties of Canadians. You do not take such measures lightly. And they need to, the introduction of such measures, you need to be able to base them on objective evidence and you need to be able to bring the public along, because these measures have the only way they're likely to succeed is if they enjoy widespread public consent. And so the public needs to understand why they're being done. They need to see the evidence as to why they're needed in the first place, so that they too are willing to accept the measures as they're presented. Now, obtaining that consent, or if you like, in order to get the public and businesses to be able to accept the economic and financial consequences of the measures, the only way that can be done is that those that are most severely affected by the crisis are able to have confidence that the government has their back. That basically that they need to believe that the government is doing everything it possibly can to take action and shelter them from the economic and financial consequences. So as a result, the overriding objective of the economic measures that have been announced so far has been to alleviate as much as possible the economic and financial damage to Canadians and Canadian businesses during the pandemic, so that they have, both households and businesses have a chance of surviving through the coma and being able to participate in the economic recovery when the pandemic abates. Now, I'm not going to go through each and every single measure that's been announced. There's far too many, and they keep multiplying like daffodils in the summer. So I'm going to break them down in terms of, and just describe in broad terms the kind of measures that have been taken so far. And that is really to set up for the last segment, third segment of this webinar, about where the gaps might be. So the measures clearly overlap in terms of their impact on households and businesses, but I think we could easily group them into measures designed first and foremost to support households, those that are meant to support businesses, and thirdly, those that are meant to support the financial system. On the household front, the first set of measures could be broadly classified as various forms of income support to partially replace lost income arising from job layoffs and the need for some folks to stay home for either for their own health reasons or to look after other family members. The other main group of measures that have been announced from an economic perspective has largely been the deferral of tax and other financial obligations to governments to help households conserve financial resources, or their cash, if you like, until the worst of the pandemic has passed. There have been other measures too, in terms of helping, trying to help people cope with the social consequences, and in Ontario, at least, cheaper hydro rates too, recognizing that people are home all day. But in the broad scheme of things, those would be the two categories that I would group the household measures that have been announced so far. On the business front, there's a bunch of initiatives here. The first set would be essentially officials have gone back to the lessons from the past financial crisis. And the first thing you do is you reintroduce what you already know. So we saw the reintroduction and expansion of the Business Credit Access Program, known as BCAP, and the export credit facilities that were offered by BDC and Export Development Corporation in the last crisis, as well as a new farm credit program that was recently announced by the Farm Credit Corporation. And as I said, these are basically trotting out the same kind of credit facilities, if you like, that were offered last time around, where the idea is to basically leverage the financial system and offer larger lending programs, but still basically on commercial terms. A second area of support has been to borrow some lessons from Europe and offer wage subsidies to encourage employers to limit the number of people laid off. They started at 10%, and I believe they bumped it to 70% in line with Europe on Friday. But fundamentally, that is to help employers to be able to continue carrying their workforce. The third set of measures on the business front has been interest-free loans, and with the rather innovative idea of giving partial grants in the case of for people that pay back their loans early, for small business and nonprofits. As well, they just announced some credit guarantee facilities for small and medium-sized businesses. And this is crossing a Rubicon in a bit, because that is effectively recognizing that the ability to extend credit on commercial terms is falling by the wayside for small business and for nonprofits. And so by offering the credit guarantees, in effect, the government is taking the credit risk onto its own balance sheet, as opposed to allowing that to influence the extension of credit to that sector of the economy. The next set of measures has been various tax and regulatory reporting obligations, where governments have basically been announcing that they will relax the deadlines and the like to make it easier for people to focus on what matters most. And finally, in what I would call the business grouping would be there's discussions of support for various industries that have been especially hard hit by the crisis, notably for the oil and gas industry. And at this stage, all we know is that such measures are under consideration, but no details are available. The third general segment is the various forms of support that are already being rolled out to help maintain the liquidity of the financial system so that lenders are capable of extending credit. The obvious place to begin is the Bank of Canada, the central bank, reducing its overnight interest rate target to 1/4 of 1%. And for the first time, announcing that it is prepared to expand its balance sheet to buy Government of Canada securities in the secondary market. That too is crossing a Rubicon to some extent, because the last crisis, we didn't need to introduce such quantitative easing measures, as they're called, in support of the economy the same way that needed to be done in places like the United States and Europe. Now we're joining, and I'm afraid we're having to join that merry band, and effectively, the Bank of Canada is effectively, in a sense, call it printing money, to use a very crude term, but effectively it is prepared to allow its balance sheet to grow in support of the financial system, something that it had never done in the past. The central bank has also introduced a variety of market operations that are basically designed to ensure that key financial markets continue to function. And as well, it and Canada Mortgage and Housing have begun reintroduced operations to supply liquidity by basically taking the insured mortgage portfolios off the books of the lenders and extending loans backed by bank loan portfolios to those institutions. And together with other central banks, the Bank of Canada has been reducing the price of its US dollar liquidity swap, US dollar swaps, to help ensure that there's sufficient US dollar liquidity in the Canadian marketplace. Other federal agencies have been involved as well. I mentioned CMHC, but there's also OSFI, the regulator of the banks and insurance companies, which has been taking steps to relax some prudential requirements, such as reducing capital expectations, being more liberal in terms of the treatment of loan classifications, to make it easier for banks and other lenders to lend and temporarily defer customer payment obligations. Now, the precise details of how many of these programs are actually going to work in practice are not surprisingly, they're still under construction, and they will take time to start up, just as was the case in the financial crisis 12 years ago. Together, though, if you add them all up, we're talking huge volumes of fiscal and monetary support for Canadians, Canadian businesses, and the economy generally, and financial system as we traverse the pandemic. I haven't seen an official estimate out there, but I think if you were to add it up, you're probably looking at something getting close to 10% of GDP at this stage, which is way beyond anything that was done last time around. It's also not surprising that these measures would be announced before all the details are worked out. When you're in this environment of high uncertainty, people need to know what is coming and at least know that they have something to look forward to help them cope with this with the stress. And it's better to get the fact that the news is that help is coming and with some ideas to how the help is going to work, even if you need a little bit of time to sort out all the details and get the programs going. So it's totally understandable why the government would announce first with details to follow. Of course, the rubber hits the road in terms of how fast will they have to get it up and running. Certainly the financial market operations I mentioned and the like, they are certainly well underway. But the broader measures will take time, but they will get there. So why don't we stop here again and see what questions you folks might have.
So a number of people have written in, Brian Brennan and Stu Watson. There's a lot of concern about the anticipated length of this economic coma, and also a concern of how long can the government sustain businesses through this. So, you know, the length of time is very, very critical in terms of how, of the ability for the government to be able to promote it. And I guess if there's any insight that you can lend us in that regard.
Well, I'll get to this a little bit in the next section, but fundamentally, the government has a huge advantage here. And because people have a high desire to carry cash, and because there's been a flight to quality where people want, in the terms of their investments, want low risk investments in this environment. Government is quite capable of funding itself these days at interest rates that are well below 1%. So access to savings to borrow is not a problem for the government at this stage. The other thing the government has in its back pocket, if push came to shove, is the fact that the Bank of Canada can finance it indefinitely and in an unlimited capacity. If worse comes to worse, it means printing money. But operationally, at least, we're basically talking wartime finance if push comes to shove. And that's the kind of thing that was done in world wars of the past, and they can do it again if they have to. And the federal government has the, at least as a nice starting point of its degree of indebtedness relative to the size of the economy, was at a low and good starting point. So I think the federal government can do this for quite a while.
Thank you. We have Jean McClellan will be joining us on Friday from PricewaterhouseCoopers to go more in depth on some of these grant programs and some of the initiatives. So there will be greater clarification for those people that are interested in that amount of detail on Friday. One of the questions that came in right now was, with this 75% wage salary program, it really only applies to businesses whose revenues are down 30%. How will that, and that are deemed essential to operate? But what if you're a business that is deemed essential to operate, but your revenue is not down 30%? Do you have any insight as to how the government, or do you think the government's going to switch that up in any way?
Can I take that question in the next section, simply because I don't want to steal the thunder of it, because I do want to go there.
Absolutely, absolutely. So with that being said, let's go into the next section, because most of the questions right now are related to that.
Okay, perfect. So this is, as I said, this is a good segue into the last main part of my talk, if you like. So, which is what I've titled Remaining Gaps, and where do we go from here? Now, in a crisis like this, speed is of the essence, and you need to be bold. And that is not something that comes naturally to people that work in the public sector, because the traditional focus there is on how to balance the interests of multiple stakeholders, which are not always aligned, and making sure that the spending of public money is well controlled. As some of my CD Health colleagues, though, have remarked, and which I completely subscribe to, in this environment, the emphasis needs to be on public servants need to prioritize action over analysis, speed of execution over policy perfection. Quite frankly, as far as I'm concerned, they will undoubtedly make mistakes, but mistakes can be fixed at a later date as the pandemic subsides. But the key at this stage is we need to do things fast and we need to go big. Now, the government started a bit on the timid side, I would argue, given the nature of the crisis. But on Friday, they seem to be making up for lost ground. And some of the initiatives that were announced on Friday are becoming bolder. But I do think that there is more that will need to be done before we're through the worst of the pandemic. For example, and this I think will pick up on your question. In the case of the business sector, well, I'm glad to see that the government has been moving towards introducing measures that support the flow of credit on commercial terms, and to entertain government guarantees for credit facilities for small and medium-sized businesses. I would seriously hope that they're prepared to expand the program both in size and scope as the need arises. Quite honestly, it would not surprise me in the slightest if we ultimately have to move to a system where credit will effectively have to be all government guaranteed, regardless of the circumstances. I don't think it's fine to start with what they've announced, but I think if the ability to conduct financial transactions on commercial terms is falling by the wayside, there is no option but to have the government step in and effectively guarantee all financial transactions. Similarly, in the case of supporting the financial system, it's great to see the Bank of Canada stepping up and being willing to expand its balance sheet to support the Government of Canada debt markets. And it will certainly give it more flexibility in supporting the financial system. But here again, if conditions continue to deteriorate, I think it may need to consider doing the same in support of other parts of the financial system, which basically will mean letting it rip and going big in terms of the amount of liquidity being pumped in, even if it does mean that in effect, the money supply is going to expand commensurately. I also think down the road, there's going to be a need to confront the question of whether guarantees are enough. Last time around, we had subsidies for auto firms because they were considered to be critically important for the functioning of the economy, especially in Ontario. And I imagine there will be other industries this time around that are going to need similar kinds of support, and it will have to be large size and scale. And here, think of airlines and think of oil and gas firms. And who to subsidize, and in what size and what scale, what terms, are going to be important challenges for policymakers and their officials in the days and weeks to come. And again, it's going to have to we're going to just have to accept the fact that this is the price of keeping the economy intact and avoiding a complete collapse. Finally, I think there's going to be the question of how to pay the bill. We started to talk about that a little bit in the questions and answers. And to me, this is, as I suggested, it's not a pressing issue at this stage, because, as I said, the federal government can borrow in financial markets at almost zero interest rates. And it's not exactly crowding out any private borrowers in this environment. It's really the only game in town, and it's the only thing people want to invest in any meaningful way. And as I said, the worst comes to the worst. Wartime situations, and this is equivalent. Canada, the Bank of Canada, has the unlimited capacity to expand its balance sheet and fund the government in Canadian dollars. But when the pandemic subsides, we will have to face the question about how to pay the bill. And we'll need to recognize that it's going to be a very large bill to pay that is essentially a hit to our country's national wealth, much the same as financing a war is. And while that's clearly a bill worth paying, because for the obvious public health reasons and to avoid an economic collapse so that we have a hope of benefiting from a recovery, the question will be how to allocate the bill in an equitable fashion across society. And I would imagine that will provoke some rather lively conversations about who gets stuck with what part of the bill. And the choices will essentially boil down to a question of taxes, a question of which government programs get prioritized, and potentially even a question as to whether we see inflation rearing its head, which to my mind, as a former central banker, is basically another form of tax. So, and it doesn't, and while the federal government has a strong financial position to start with, we know that many of the provinces do not. And then the same applies to some local governments. So we are going to have a lively conversation once the dust is settled as to how to allocate the bill. Now, we have a couple of things, though, that are on our favor. It's not all doom and gloom. The first is we're not alone. Every country in the world is going to be having this situation, which means we should not stick out like a sore thumb. And that gives us, in its own way, some room to maneuver that might not be there if we were doing this by ourselves. Think back to the late 1980s, early 1990s, when we were facing fiscal challenges of high government debt. In that environment, we were by ourselves, and so we stuck out like a sore thumb, and the financial markets were not very tolerant of the situation, which led to tax and measures and spending constraints to get the fiscal situation under control. In this environment, every country is going to be in the same boat, and as a result, that gives governments generally more degrees of freedom in terms of how to manage the situation. The other big thing in our favor is that we have these exceptionally low interest rates. And so yes, the government's going to have a big jump in the levels of indebtedness, and their interest costs will rise because of having to pay these even some interest on the amount of borrowing that you're doing. But once the pandemic subsides, it is reasonable to expect that the greater growth of the economy in nominal terms is going to exceed the interest rate that the government is paying on these new borrowings. And that, over time, all things equal, will give the government some space to manage the situation over time. The similar kind of thing happened in the period after World War II, for example, where interest rates are fairly low and the growth rate of the economy was fairly buoyant in the 50s and the 60s. And as a result, the share of what seemed like a very large government debt in the immediate aftermath of the war eventually shrank relative to the size of the economy over time, as the compounding nature of economic growth worked in its favor because the growth rate exceeded the interest rates. And we will be in this situation here because when the government's able to borrow for next to nothing and we get growth down the road, the math works in governments and all of our favor. But the other lesson from World War II is also how we choose to manage our way through this process will also matter. The choices the governments made in the aftermath of the Second World War, in some cases, led to some lots of unexpected prosperity, think Japan and Germany. In other cases, it led to sluggish economies for an extended period of time, think England. So the choices that we make in terms of how we manage, how we do the cleanup after the pandemic has subsided will also matter to the future prosperity of our country. Now, I would imagine as well that just as the planning of the reforms that were introduced in the wake of the financial crisis last time around began in earnest in the midst of the financial crisis, I would expect at this stage that not only are governments busy thinking up all the measures they need to introduce to get us through this pandemic, I would expect they're also thinking about how, and beginning to think about how they're going to manage the costs of the cleanup once the pandemic is over at this point in time. And I'd be surprised if they haven't already given some thought to that issue. So why don't we stop there and we'll take all those questions.
So a question that came in has a little bit to do with banking. Canadian banks are relatively prosperous, but not that nimble. One of the concerns is how quick are we going to see a response in terms of banks easing up some of their conservative criteria, particularly their in term sheets for people purchasing commercial property or other aspects of banking. Where do you see the bank really coming into this?
Banks, I think, at this stage are going to be focused primarily on helping their customers manage their existing credit lines and the like. And as I said, I suspect they're going to need government guarantees before we're done to do this properly. And so I think at this stage, the focus is going to be very much on helping people continue to meet their existing obligations. I don't think they're going to be looking to do major credit expansion per se until we're through the worst of this. And no, they're not the most nimble organizations, and they too have the operational challenges of having to have people work at home and the like as we go through this. So, but I would hope that if government guarantees are used more widely, then it will be possible for lenders to be able to be a bit more nimble going forward. Probably would be part of the price of, I think, for getting the government guarantees in the first place. But you need to ask a banker if you want to get into the operational details.
So again, a question about banks. Why are banks increasing their rate while central bank is reducing their rate?
Good question. And I'm afraid you may not like the answer. The banks, especially smaller financial institutions, my understanding, are starting to face some challenges in accessing funding in markets. And that has led to smaller institutions offering some rather juicy GIC deposit rates these days. I see some institutions posting over 3% at various terms as they try to seek term funding. And what that is doing is essentially, when you have some that are feeling more strained than others, they start posting more aggressive rates, and that causes everybody else trying to post aggressive rates too in order to attract savings. So in a sense, they're feeling funding pressures, and they're passing those funding pressures along in the form of higher mortgage rates. So it's true, government yields have declined, but the cost of funds for the banking system, especially for term funding, have been on the rise because the marketplace in general, just as it did in the financial crisis, is starting to shut the doors a little bit to institutions trying to achieve access term funding to be able to make those kind of term lending commitments. And hopefully the Bank of Canada's operations and others will help to alleviate that, but there's no reason they need it is because the funding markets are under stress as a consequence of the coma.
Thank you. Are you aware, in your position right now, of a definitive resource that people could use as a one-stop shop for all the government-related programs? Does the government have something like that on a website where they're putting all of this information?
The Department of Finance website is pretty good in at least giving a high-level synopsis of the various programs that they're talking about. That's probably the best I've seen. And they've been done a reasonable job of keeping it up to date, because I noticed all the measures that were announced on Friday were on the website on the weekend. So in terms of getting an initial entree as to what programs are out there, that might be a good place to start. In terms of the details of how they will work, those are still a work in progress. So getting those is going to be challenging. But I would start with the Finance Department's website.
Thank you. A few people are saying it's comforting to hear that you have some optimism and that there is optimism and reassurance on the financial level, that people really need to hear that, and that like you say, it's a quickly moving target in terms of the government's response and how quickly they will respond in terms of this. But as you said, they were slow to the start. Let's hope they pick up speed in terms of the ability to invest in in companies. A question I might have is, you talked about the criteria which businesses would be selected for support. What would be the committee makeup for that be? Who would be on that board?
When it comes to talking about major subsidies for industries, that would have to be basically a cabinet decision. And I would imagine the process would be probably led by, at the federal level at least, which I know better than I do the provincial levels. At the federal level, it would likely be the Department of Industry and Department of Finance that would be jointly working out the details on that.
Thank you. Right now, we don't have any more questions on the board. Is there anything that you would like to sort of put together as a bit of a summary for us, Mark?
Yep, please. So the key points I wanted to highlight today is, first and foremost, this crisis is different. Combating the pandemic has required placing large segments of the economy into coma so that the medical system can focus on helping Canadians get through this crisis. Secondly, that economic policy at this juncture is basically focused on helping Canadians and Canadian businesses traverse the coma intact so that they can be resuscitated and we can all benefit from the economic recovery down the road. As I mentioned, there's been a wide range of measures that have been announced to support businesses and households and the financial system. That really is unprecedented, even relative to the previous crisis, which in its own way was unprecedented. So we have a great deal of stimulus in the pipeline. If I had to hazard a guess, and it is purely a guess, is you're probably talking degrees of economic support that represent 5 to 10% of the economy at this stage. But I wouldn't be surprised that more radical steps are going to be needed before we're through the worst of this, especially if the ability to transact on a commercial basis falls by the wayside. Our prospects for success in this regard, however, will also not only depend on what we do, but will also on what other countries will do, because we're far too dependent on other parts of the world to buy our goods and services, and for us to survive, to be able to do this alone. So we do have an interest in how other countries perform, which probably explains some of the actions that the government has taken vis-a-vis supporting other countries. After the pandemic passes, and it will pass, we'll need to talk about how we pay the bill. And as I mentioned, this could be the main political conversation at some point in the future about who pays the consequences, either in the form of taxes or reduced government spending down the road, or indeed, if you look at other more unorthodox ways of spreading the pain. But that conversation will have to happen in due course. It doesn't help that the Canadian business community, the Canadian households, and many provincial governments came into this pandemic with large debt loads. At least the federal government had a reasonable starting point. But the one thing that the federal government in particular and the provinces to some extent have in their favor is that they're able to borrow in this environment at extremely low interest rates, virtually close to zero in the case of the federal government, and that future economic growth will obviously be at a higher rate than the interest costs. So that in its own right will give the government some room to maneuver in managing the financial consequences of this pandemic. And the fact that they're not alone and that everybody around the world will be facing the same challenge also gives the government some room to maneuver. But how we do it, of course, will matter in terms of our future economic prosperity. So that I would say would be my key messages, and happy to take any final questions.
I think that was an excellent summary. And again, I want to say how you have reassured a lot of people and given them the confidence that our government is in a healthy position to be able to support industry and businesses through this and a time frame that we're not sure of at this point. I'm just looking over any questions. Here's another one on the bank. Who is the Canadian government borrowing from?
Well, at this point in time, the government is still able to borrow in its usual fashion. So, in effect, it's issuing bonds into the marketplace and treasury bills into the marketplace, and they're going to be snapped up by a wide range of investors, both here in Canada and abroad. But I would think primarily here in Canada, to be honest. And it would be because there's a lot of people that don't really want to hold equities and other forms of investments these days. They want to hold stuff that they know is low risk and easy to trade. And so in this kind of environment, people love government securities. So there is, I think, a pretty robust appetite for those securities. And there's something called a central bank sitting in the wings, now willing to buy securities to the extent that there's any lack of demand in the marketplace.
And like you said, it's truly a global crisis, and everyone's going to have to pitch in at this point.
Unfortunately, that's true.
The actions seem to have a time frame over the next quarter. Do you think that that's realistic?
Well, I think the sooner they can get them done, the better. If you're a business, for example, that has suddenly seen its revenue base evaporate in a matter of days because people were dependent on people who are now stuck in their homes and the like, they need support right away. And so from that standpoint, I don't think they have the luxury of waiting months. So there will need to be steps taken, I think, to give immediate relief one way or another. I don't think they have the luxury of waiting months. So I hope whatever mechanisms the government uses to do things like extend the credit guarantees and the various other measures that are offered get done fast, because we're talking days, maybe weeks, not weeks versus months.
Thanks, Mark. And I'm just pulling up another question here. No, it more is about the recap for locations for information on the measures that the government has taken. And again, I wanted to remind people that we will have a member of PricewaterhouseCoopers speaking to us on Friday, and she will go into depth on the changes and provide us with an up-to-date version of where things are at and how quickly you can access these funds. But at this point, Mark, I think we would like to say thank you for being with us this morning, for providing this accurate and reassuring information. This recording will be available to everyone shortly after the presentation, and Mark has also agreed to share his notes with us as well. So with that, I would like to say thank you very much, Mark Zelmer, for joining us this morning on behalf of Tech Canada, and good luck and stay safe.
Well, likewise to you folks, and thank you again. It was an honor to be asked to address you, and I enjoyed preparing for it and taking questions. So thank you very much. I appreciate it. And yes, I hope everybody stays safe, and I hope people are able to get the support they need as quickly as possible. Thank you.